Shares of Facebook are down 4% this month, but options traders are betting on a rebound. We go to the telestrader. Pete and John standing by. Pete, you're up first.
Yeah, it's been in this consolidation. You know, you could see it, Scott. I mean, that severe drop that it had, and it's just kind of ever steadily kind of been moving to the downside. But maybe it's starting to move to the upside. We'll see if this continues at all, because when the stock was 168.90 was where the stock price was trading earlier today. We had some huge buyers walk in. Now, this was earlier in the day, obviously, a little bit earlier in the day. So they bought the October 175 calls, but they didn't go for the full month. They went to next Friday's expiration. So very, very short term. They bought 4,400 of them at the time, paid about 37 cents up to about 65 cents on these options. I immediately jumped on these as well. Obviously, these are trading a little bit higher now, so obviously you got to be a little bit careful.
Yeah.
But 170 plus in the stock, if this gets through 175, these things could actually really skyrocket very fast. So I'm going to hold these about a week. They expire next Friday, so I have until next Friday. I like what we're seeing here. I still own the stock, but I like to participate once in a while when I see this kind of option.
You know what this tells me, Pete?
Yeah.
That because it's so short term.
Yep.
There's still not a full belief that this thing's out of the penalty box, so to speak.
Well, you're right, but they're also not out of the penalty box in a very short term, but that's a short term in terms of 175. We're only talking about $5, Scott. Take a look at where this stock was just 3 days ago. Early Tuesday morning, this stock was actually trading at around 161 or something like that. So pretty nice move to the upside. Look at that.
Right.
That's Tuesday morning. That's a nice move it's already made. If this thing continues, it could very easily be 175.
Yeah. All right, John, you're up.
All right, take a look at this. I've got two discretionary plays, Judge. First one, Royal Caribbean. In this one, they're buying calls, upside calls. Like I say, a discretionary play because it turns out these guys actually are a seasonal play as well. They usually run into the end of the year as people are making those bookings for the springtime and so forth. So Royal Caribbean, they were buying March call options with the stock at 129. They're buying the 140 calls. That's pretty bullish outlook, obviously. So the March 140 calls, they sold a call above it, creating a call spread. I did the same thing, and I'll probably be in that 30 to 60 days. One other one for you, Judge. Take a look at what's going on in Hilton, HLT. This is a January. Both of them longer term than what Pete was talking about, but both of these obviously discretionary as well as business spending with Hilton Worldwide. They were buying in calls in here with the stock at 82 bucks. They were buying big chunks of calls over 12,000 of the January 82.50s. They also sold a higher strike above that. And so I piggybacked on that trade. I'll be in these again, 60 days as much as 90 days, but I'd say 60 days carries me through the earnings cycle.
And I own stock in this one already, Scott, and I'll tell you what, this gives me more confidence that somebody sees upside coming here for Hilton as well.